What if I told you I had managed to crack the trading algorithm with this simple trading strategy that's going to blow your mind? This strategy has been able to make me over 100k in a course of 1 year prior backtesting. It's what I call the ultimate Fibonacci strategy. Before we dive deeper into this video, welcome to the Trading Blueprint. Here we are on the XAESE chart on the 1 hour time frame. This strategy works better on high time frames, and I suggest you can do well to test out what's best source for you. Do well to like, subscribe, turn the notification bell, and never miss a video from Trading Blueprint. To proceed, we need to identify a dominant candle break, and if you don't know what a dominant candle break is, it's simply when two or more candle breaks an opposition candle. I created a picture on the left hand side of the screen for those that are beginners to this theory understand how it works. You can see the green candle is broken by two candle or three red candles. And that's just how dominant candle break work. Next step, we need to identify our Fibonacci levels. This is like our holy grail signals on when to enter the market, take profits and stop loss. And there are certain levels we need to add to our chart, and I'm using MetaTrader 5, so I think there's a way to use TradingView, which is really popular, and we need to add the levels, and our first level will be 1.78, and we should name that entry zone 1. Entry zone 1. We add another level and we name that 1.88, and I'll name it entry zone 2. Entry zone 2. Another level, and this time we input 2.78, and that will be our entry zone 3. Finally, we add a last level 2.88, and that is our entry zone 4. Zone 4. Once that we are done setting the Fibonacci up, and let's look at how we'll implement this into our strategy and hopefully profits from it in the long run. So once we're done setting our Fibonacci levels, next step is to add it to our chart, obviously. So we click on insert and object Fibonacci retracement. Now pay attention, guys. The 0.0 level should be at the highest tip of the candle. Doesn't matter the candle, it can be the red or the green. And the 100 level should be at the tip of the candle that broke the opposition candle. Right in this point, I have circled the area that this place interacted with and how it came out with the strategy. Next, we need to find our signal, of course, and this is a place that I took my trade. As you can see, this small blue arrow here. Yes, I took my trade there, and mind you, when using this strategy, you don't need to use high amount of stop loss. Maximum should be 30 pips, and this zone gave me a perfect stop loss. I didn't even use up to 20 pips. I think it was 15 pips for my stop loss, which is really good, and it helps manage your accounts, make it not blown away in an instance. So I use the supply zone, and let's see how this plays out. Let's see. To be sure, we're having our TP levels, which is always on the 161, and our entry zone 1 and 2. That is our TP1 if you are entering from entry zone 3 and 4. Then our TP2 should be on the 100 level, which we can also call the shadow level. I usually like calling it the shadow level. So you can also take your TP2 there, and let's see how it works out. There you go. TP1 touched. Let's continue. Okay, TP2 touched, and you can see how this strategy works. Very beautiful and clean, and You may be wondering, like, how did you know the exact place to enter? Well, that's not because I use this strategy as a naked chart. I added an indicator which hopefully, if you stayed long enough, you would know the indicator. I added this stochastic indicator, and this stochastic indicator is going to show us the right directions and confirmations, because confirmations are also essential in this kind of strategy. So let's see how it will look like when we add it to our chart. Levels should be at the 5% K period, and percent D period should be 3, and our slowing should be 9. Okay, now that this has appeared in our chart, we can see our confirmation signal. Now, how the stochastic RSI works: once it's below 20 is oversold, once it's above is overbought, and we bought our signal when it was oversold. It was touching 20 or below 20. And this strategy requires a lot of patience, and it has to correspond exactly how it is in this video. If not, if you rush and FOMO catches up with you, I'm pretty sure that it will be a downfall. So for you testing this strategy, make sure you use exactly the tools I use, exactly how I did it, and you can be able to get this massive 500 pips in just how many hours? Few hours. So that's all for today's video, guys. Thank you for watching, and hopefully you have to subscribe and join our community in the trading blueprints, as I just started this journey, and I'm looking forward to see you traders in the Telegram channel so we can discuss and help each others build more strategies. As this channel, I'll be backtesting you guys strategies anytime, any day, anytime. I'm there for you guys. See you guys in the next video. Peace.